You are listening to chartingwealth.com for Wednesday, the 20th of June, 2018. The book is out in its third printing, and your copy is waiting for you. I am autographing all of the copies for you and sending personal letters out, and we so appreciate all the support. We're also sending out copies of our Trader's Journal. Each Trader's Journal contains 3 months worth of daily market worksheets, weekly market worksheets, and enough trade worksheets for you to do all the trades you could possibly do in a 3-month period. So please make sure to get your copies. You can find links to order both the Trader's Journal and our book, Charting Your Way to Wealth, at the website. Just look under Every Daily Review. There's a link there. Also at our Charting Wealth YouTube channel. And under each video, there's a link there. And if you get our email, if you are signed up for and receiving our subscription service, which is priceless, it doesn't cost you anything. Go to the website chartingwealth.com and sign up. You will see under the email that you get with the video that comes every day, there's also links there to buy the book. We thank everyone for your support. We're sending them out as soon as those orders come in, so thank you very much. We've also reordered more Trader's Journals, so order them. We'll get them right out to you, and I'm autographing all the copies of Charting Your Way to Wealth. Now, don't forget, at the end of the month, there is a purple line on our S&P chart. That is the quarterly crossover. And we are going to talk about that at the end of June in just a few days. Why? Because it is the ending of the second quarter of the year. And again, for those of you interested in building long-term wealth, you need to learn how to read these quarterly charts because it is prescient. It is amazing how accurate our quarterly chart is. It would have gotten you in and out of the market over the last 20 years at all the right points. We have the Trump effect that we've talked about. We'll talk about that also, and we'll review where the market is at the end of the month. Things have changed over the course of this month, so we'll see just how things end up. Now let's jump into our charts. We see stocks. Our 2 stock indexes are down, 20-year bonds are up, gold is down. Let's jump into the S&P 500. What do we see on the weekly chart? We see a red spinning top. We've pushed through both the 2-day and the weekly trend lines starting the week off, and that is showing some real inherent weakness, down 0.38% for the day. Price percent oscillator is flat. Derivative oscillator is losing energy. We go to the 2-day chart. What do we see? Well, it's kinked over going down. We had a doji on the 2-day candle ending on Friday the 15th. And the 2-day candle ending on Tuesday, the 19th of June, is a strong red down candle, actually the biggest we've seen in many, many days. So again, derivative oscillators losing energy, price percent oscillator headed down, not crossed over yet, but is showing some true weakness. And of course, the 4-hour chart crossed over going down on the price percent oscillator back on the morning of the 14th, Thursday, the 14th of June. We saw things really topping off and sliding sideways and then dropped off, punching through the 2-day trend line and is just above the weekly trend line at this point. Strong down in the morning, a little bit of a recovery in the afternoon. Price percent oscillator heading down. Derivative oscillator pretty much flat. So again, we're out of that trade on the S&P 500 for now. We'll continue to watch things. If before the 2-day chart crosses over going down, the 4-hour chart crosses back over going up, then of course we might look for another up trade. Don't know what's going to happen. Remember, we're not forecasters, we're trend followers. That's the smart way to do it. What do we see on the Qs, the NASDAQ 100, the tech stocks? We see the derivative oscillator still gaining energy, price percent oscillators heading up, not at the same angle it was in the prior week. We see we have a red box with price movement trying to push through the weekly trend line. It has already pushed through the 2-day trend line. Now remember, we're just 2 days into this weekly candle, so we're not calling it yet, but we are paying attention to what's happening so far. We look at the 2-day candle. It's right there pushing through the trend line, and we're still above the weekly on that. And when we look at the price percent oscillator, it is starting to head down. Derivative oscillators also losing energy on that 2-day chart. And we look at the 4-hour chart, and of course, it's been moving down strongly since particularly in the afternoon on Monday. It was pretty much flat in the morning, in the afternoon on Monday, and then dropped off in the morning on Tuesday, and then just sort of petered out of that down move in the afternoon, closing on the Heikin Ashi candlesticks right there at the 2-day trend line. So again, keep your eye on things. We're interested to see if price will push through that 2-day trend line. If it bounces off of that and starts moving up and crosses back over, going up, since your 2-day and your weekly are still in confirmed up moves, it could give you the possibility of jumping back in. We don't know that that's going to happen. That's just an if. If that does occur, then of course you would look to hop in. Otherwise, you've taken your profit on the cues at this point from the weekly vertical crossover going up. Okay, back to TLT, back to the charts rather. We look at TLT, we see that we had a weekly vertical crossover. And again, it wasn't the best of them because the price percent oscillator crossed over, but the derivative oscillator didn't. It did a week later. And we see that we did have, following the weekly vertical crossover back on the 25th of May, that first full week, well, that first week ending the month and the first day of June on that Friday was a strong up week for us. Then it sort of tracked sideways the next 2 weeks. But so far this week, TLT is up. We see the derivative oscillator gaining momentum, price percent oscillator heading up on that weekly chart. We look at the 2-day chart, and we can see that the derivative oscillator's pretty much flattened out. It was heading down. The price percent oscillator is heading up, and we have our second green up candle, price movement above the weekly and the 2-day trend line at this point. Remember, the 2-day and the weekly are in confirmed up moves. We look at the 4-hour chart. What do we see? Well, of course, it crossed over going up back in the afternoon on Thursday, bumped up strong on Friday, then sort of Friday morning, and then sort of tracked sideways Friday afternoon, Monday morning, but bumped up Tuesday morning after a little bit of down movement on Monday afternoon, a little bit of a pullback Tuesday afternoon, but again, nice up movement, a little over 0.5%. Derivative oscillators gaining energy. Price percent oscillator is headed up. So that's looking nice for a bit of a pop-up and a gain that we're seeing on TLT. So again, those of you who jumped in that, continue to pay attention to it, track it, and see where this goes as price again on that weekly is above the weekly and the 2-day trend line, looking quite nice, particularly on that weekly chart. Now lastly, we will go to gold, GLD. Of course, gold has been in a confirmed down move since mid-March, really started rocketing down back on the 27th of April. Price movement is well below the weekly trend line at this point. We can see the derivative oscillator gaining momentum, price percent oscillator headed down on that weekly chart. 2-day chart, of course, crossed over going down back on Friday, the 2-day chart ending Friday the 15th, and really hammered down on this latest candle. Big down candle, price movement again well below that weekly trend line on the 2-day chart. And we will start drawing a new trend line on the 2-day chart now. And we look at the 4-hour chart. Now, we were concerned about maybe some price trying to hold around the 121.15 or something, but we saw price drop over heading down nicely on the morning of Tuesday. A little bit of an uptick in the afternoon, but we see that the derivative oscillator gaining downward momentum, price percent oscillator heading down. So that is looking quite nice with that crossover going down, again, following the pattern. The problem is, of course, the 2-day chart, when it actually crossed over, was after the 4-hour chart did. So again, you can look for a pullback at some point on the 4-hour chart. And when that occurs, that may give us a decent jumping in point for a down move on gold. Folks, that's where we are as we end the day on Tuesday. Get ready to go into Wednesday, the 20th of June. Again, get ready for that quarterly review that we're going to have at the end of the month. If you want to receive that, of course, you need to be a subscriber. So you need to go to chartingwealth.com and sign up. You just put in your name, your email address, and you will receive our daily market reviews, our once-a-week comprehensive review and forecast, and all of our specialized training, in particular, that quarterly review. But if you're not signed up, you're not going to get it. That's where we are. Thanks so much, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.